Yeah, hello and welcome to another update video about MATIC. MATIC seems to be outperforming some coins finally. We're now at 127. We'll see if that is now something that leads to a more parabolic increase, FET style. So far, MATIC has, shown potential, but has not yet been able to fully break out. This chart shows a lot of bullish potential. We had this initial 1-2 setup. You know about all of this. We don't need to repeat that, but it's basically, I just mentioned it because it was a bullish setup that basically set the stage for the current increase. Then we have another 1-2 setup here that we talked about. We had some really good support zones here as well that I've taken off because we don't need them anymore. I also take out the previous ones. We don't really need them anymore. But yeah, it just means Elliott wave helped us really to determine some really good entries and support zones. And the most recent one was communicated, I think it was in the last video. If not in the last video, then it was on Discord and Telegram for our members. But I think it was in the last video where I communicated that we could be dealing here with a wave 2 pullback. Shortly afterwards, we saw the dip into the support zone, and the reaction to the support zone shows you this chart is a great example of why it is not good. Okay, I shouldn't say that. Why it's not the best strategy, in my opinion, to buy breakouts. Why? Because there were a lot of attempted breakouts here, but they all failed, okay? But still it printed higher highs, higher lows. It's a great chart for pullback trades. So we had a lot of support zones in the recent weeks here. And I think only one of them broke, but you know, we had, I think it was throughout February where 100% of them were, we had 5 or 6 of them were successful, and a really good success rate. For anybody who's trading the short term. I mean, I would not think that someone who's looking for, let's say, medium term, long term swing entries, use them all. But the most recent one we had, because pullbacks are shallow, we have to be fast. But the most recent one we had was this one. Basically, the idea is that the move between the 23rd of January low and the March high here, well, not the March high, but the 4th of March, 5th of March high, that was a wave 1 in 5 waves. I'll take out some of the subwaves. We don't need them anymore. Just trying to keep it clean here. Okay, and we had the 5th wave to the upside. Remember that we had all the waves we needed in place, even down to the micro as wave 1. And then this was the wave 2 pullback, which happened just after that. Fantastic. And then this could be a small wave 1. I did say yesterday, a wave 2 pullback. In the preferred scenario, now focusing on higher as long as the upper support range is holding. At the same time, when we get a dip, there could be a reaction to these Fib levels. So great for limit orders. The problem is in the current market, if you're looking for entries and short-term entry or short-term pullbacks, it's wise to use limit orders. You will not otherwise be able to just buy here. Limit orders. That's why what we offer the Fibonacci levels for in our service here. So it could be the wave 2 pullback that probably bottomed. Great reversal here, and the third of a third wave might now be unfolding. If this is the third of a third wave, it's not only the third wave of the third wave, it's the third wave of the third wave of the larger third wave. Usually the most bullish and strongest element of the trend. Something I try to prepare you for a while now. And I mean, if anybody has FOMO now, okay, you know, everybody was prepared. So ideally, you don't have FOMO. Ideally, you're positioned for this move. Sometimes it takes a bit of patience. Even if it doesn't follow through, this is already great profits. I mean, for anybody who wants to bank something in, you know, it's always wise to take some partial profits or to move up the stop loss. But that depends on your personal strategy. I don't care about this because I want to see it get to, you know, $5, $6, maybe even 10. So I don't really care about the smallest movements, but probably as we're getting towards, I mean, probably will at some point take my own investment out and then just let it run, okay? And yeah, ideally, you know, if this was a 1-2 and another 1-2 setup, then the third of a third wave should take us minimally to $1.55, $1.56. The first ideal target is at $1.62, but there should be some resistance already at $1.46. But $1.62 is really where I would like to see this third get to. I'm not saying the third will finish there, but I'll say it's the first ideal target, so it can always go higher. But that's when I will start to put a wave 4 support zone onto the chart. Now, the level that needs to hold is obviously yesterday's low to keep this upside pressure going. I mean, you can always, if you're looking for short-term support, it's usually the 50% Fibonacci level of the current third wave that's at $1.19. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.